Here is the same chart going back 50 years. And you can see how rare this opportunity is. Hi, I want to congratulate you for being here, because if you're watching this video, you can probably count yourself among the investors that are going to be successful. I'm saying probably, this isn't a guarantee, but to be successful in investing, one of the things that you want to do is to be buying when everybody else is selling and selling when everybody else is buying. In other words, you should have a lot of interest in a subject when everybody else is disinterested, and you should be disinterested when everybody else is interested. And one thing we've noticed is that whenever gold and silver are rising, we get a lot more views when a video is about gold and silver than when gold and silver have been falling for a little while, like they have recently. But this is actually when you should be taking in the most information, because it means that there's an opportunity coming up somewhere, and you want to be prepared to take advantage of that opportunity. Now, one of the things I want to talk about is the world's central banks have put themselves in a box. It's going to be very difficult for them to extract themselves from this box without making a mess of the world economy. One of the things that they've done is massive currency creation that has created asset bubbles in the places that currency first goes. When they create currency through quantitative easing or open market operations, that goes into the stock market, brokerage houses, banks, creates asset bubbles in those areas. When they did the recent rounds of stimulus through government checks and stuff, when the government is paying individuals based on currency that the Federal Reserve created, then what you see then is it flows into the retail sector, and it creates inflation in retail goods and services. And that's what we have been seeing now. The world's central banks are all saying that, well, inflation is running too hot, we're going to have to raise interest rates, and we're going to have to cut back on our currency creation, or actually take back some currency and destroy it, extinguish that currency that has been created. And so I see some storm clouds on the horizon. I see a tough time for the world's central banks coming up very shortly. And part of the reason for that is because of something I'm going to refer to as, a global problem when it comes to the people's personal well-being, I'll say. I don't want to get any of those stupid banners below this video. I don't want to get on any lists, and so I'm going to be talking in a little bit of code for the next couple of minutes, because there are algorithms that just pick this stuff out. But this thing that's been going on for almost 2 years, there have been a couple of variations on the theme. And if you understand what I'm talking about when I say variations on a theme, things happen in waves and cycles. I've got to frame it in stock market jargon. We've seen several waves in this big super cycle that we're going through. And there is this final wave coming up. And this is a brand new variation on a theme. The thing is, when you're transferring stuff from one party to another party, some things are more transferable than other things. I can't say certain words. And there's this brand new variation on a theme that's only been around for a couple of weeks. But what they've discovered so far is that it is much, much more transferable. There is a possibility, though, that when it comes to downside risk, there's much less downside risk with this brand new variation on the theme. But you can expect governments around the world to overreact to this again, because of how transferable this particular asset is between parties. So this new bubble that we're going in, this new wave that's going to lead into a bubble, is going to happen very rapidly. As it does, you're going to see government responses to this. Now, this is globally. This is in the United States. And you can see that this new asset bubble is just barely taking off in the United States. But look for this to just absolutely explode over the next month and a half or so, because of how easily you can transfer this asset from one party to another. I shouldn't call it an asset. This is more of a liability. You can transfer these liabilities very quickly. I'm sorry I'm laughing. This isn't funny, but the point is that the world's central banks want to cut back on, they want to raise interest rates and cut back on currency creation, and that is not going to happen. The opposite is going to be happening very quickly because of new government policies. And so that brings us to the next topic I want to talk about. This is a chart of gold going back 20 years to 2002. And I want to talk about something called symmetry here. On this chart, you can see this rise in gold. And then back in 2008, it pulled back and made an inverse head and shoulders pattern. It pulled back and made a shoulder, a head, and then another shoulder. And look at the spectacular symmetry of this thing. The length of time for each shoulder is almost identical, not quite. But you look at this thing and it is just amazingly symmetrical. And then we've got this is called a cup and handle formation. The cup has been formed, the bowl, and now we're forming this handle. That is one of the most bullish technical indicators that there is. Now, I'm going to go to talk a little bit more about symmetry. We had a peak, and then we had about 20 months of consolidation before this broke to the downside. And then we've had the complete bowl form, the cup, and now we're forming a handle, and it's only been about 16 weeks. So if we have a supersymmetry here, which is, there's a good likelihood that this is going to be very symmetrical. I'm going to show you a few more instances of symmetry in just a moment, but it's pointing toward, next March or April that we may see gold do a breakout. And so there's probably a little bit of time to make some purchases, and this consolidation may go on a little bit more. There's potentially a little bit more downside, but there is a lot of upside. So the risk-reward ratio right now I see is very little risk, a lot of reward. Gold will not go down a whole lot more, especially when you see the response that all of the world's central banks and governments are going to have in the coming months. And so so let's move on to see a little bit more symmetry here. Now, this is more of a close-up of gold. So this is just the last 2 years. And one of the things you see here is there's really no decisive move going on right here, other than a potential head and shoulders pattern building, which would give us some low down in the lower 1700s, higher 1600s. But look back here at the crash, we'll call it. Hopefully that doesn't get me flagged for anything. But we have an inverse head and shoulders pattern again, and the symmetry is phenomenal. And if you draw a neckline across this and flip that head upside down, you're predicting somewhere up here, and it way exceeded that. And so this was a good predictor of a future move. And what you see here is this incredible move, but it's that symmetry that I wanted to point out. So the symmetry that you saw in the last chart of the consolidations that happened after gold's peak in 2011 and the peak back in 2020, these could very well play out. So now I want to give a big shout out to Matthew Fraley of BreakpointTrades.com. He does have a weekend newsletter that is sometimes free. So you may want to go there and take a look at his weekend newsletter. The latest one had more than 100 different charts on it. So he gives you a big overview of the economy. And this is for mostly for traders. He incorporates people that are day trading, people that are swing trading, and even a little bit more long-term traders. Now, I am not a great trader. I've decided to be an investor and be long-term on things. I did not do well when I was trying to just trade in and out of things. And think about the people that you have known that trade in and out, in and out. I only know one person that has been really successful at that. Everybody else, and it's like, there's another 10 people that I know that have been spectacular failures at that. And so, but what I want to point out here, this chart, he's comparing the dollar to gold, and this goes back to 1999. I'm very grateful for him for doing this, chart. What I want to show you here is that, starting back at gold's peak, or the dollar's peak, gold was bottoming, and then gold rose, and then the dollar bottomed, and that put in a short-term peak for gold. Gold then went down, and while gold was going down, the dollar rallied, and when gold put in its bottom, the dollar put in a peak. Then we have the dollar rallying and the dollar chopping sideways, while gold completely ignored the dollar during this period of time and just pushed forward. And then shortly after the dollar bottomed, gold put in its 2011 peak. When the dollar started rallying, gold went sideways, and then the dollar put in a second peak there, and gold started descending, and then gold put in a bottom at a short-term peak for the dollar, and then gold rose a little bit, but then just before the next peak, gold hit a bottom. Once the dollar hit that peak and started falling, the dollar was falling, gold was rising just slightly, and then here they both rose together. That's very unusual that they would both be rising together. Then the dollar fell, gold fell a little bit and has been chopping sideways now while the dollar has been rising. Will we see them both rise together? I do believe that you're going to see the dollar hit this upper resistance area here, the previous peak that it put in, and the previous peak from way back here, and a support area back there. So I think that the dollar may go up, and if the dollar goes up, gold might do that pullback to its lower support area down near 1700 or just below. If it does, I would look for silver to be like gold times 1.5 or something like that. So this is very good news for somebody that wants to be an investor and buy at the right prices. I know that people that just bought are going to, oh, no, don't tell me that it's, well, you know what? A couple of weeks ago, I made a video and I said, gold had just done a pullback. And I said, I'm going to wait a little while. I've got a lot of gold and silver. So if it just rises from here, I'm not worried about it. I will do very well. In fact, I've been collecting gold since there. And so I've been buying from there all the way up. So I'm in a good position. If you just bought recently and it pulled back, get used to this, because this is what happens. Markets go up and markets go down. But when you look at the fundamentals always play out. They just may take a little bit more time than you think they should. So let's move on here. And this is silver. And silver is much choppier, and you don't see quite the symmetries going on here. You don't see the same patterns, but that is responsible. That is what is responsible for the gold-silver ratio. The silver being undervalued when it's up here. When this ratio is up here, silver is way undervalued compared to gold. When it's down here, it's way overvalued compared to gold. But look at where we are today, and look at how rare this opportunity to buy silver is. You know, one of I've got a couple of different exit scenarios, and one of them is trading my silver for dollars. The other one, though, is trading my silver for gold, and then trading gold for dollars or something. You know, so there's several different scenarios. You might be trading gold directly for real estate or something like that. Who knows what the future may bring? I know that by having a lot of gold and silver, I sleep well at night. Well, actually, I do have some sleep problems, but they're unrelated to anxiety, worrying about what the future may bring. So anyway, this shows how rare an opportunity this is. This goes all the way back to 2002, and there's only been a few times where silver has been this undervalued compared to gold. And here is the same chart going back 50 years, and you can see how rare this opportunity is. There was a little while here from 1990 through 93, up to 94, where this opportunity presented itself, but it's a pretty rare opportunity. So to end this, I want to end it near the beginning of this video. Will these cycles play out? Will the supersymmetry play out? Well, you know what? It doesn't. If the supersymmetry plays out, we've got until March or April to accumulate more gold before we're off to the races, potentially. Nobody knows what the future will bring, but I do know that you can't manufacture currency and hold interest rates really low without prices eventually reflecting that, and that is what we've been seeing in the inflation. But you're not seeing gold inflate yet to account for the currency supply, and believe me, it will, because it always has throughout all of history. Gold accounts for an expanding fiat currency supply. I want to thank you for watching. I'm Mike Maloney. We'll see you in the next video.